Morning. Oh no, JP, not Hollywood, Beverly Hills. Yeah, like where you live, you know? Gotta be up in the hills. Oh, sugar level doing good? Huh? Biohacking. Real time. All right, I'm just moving things around. I think we can start. All right, let's go. Good morning. It's just after 8 o'clock a.m. It's time to start our week. I'm trying to get the music down. We got a really busy week. We got a very interesting week. There's a lot of news on the calendar. A lot of central banks. Yeah, lots of central banks. So anyways, this is our opportunity to get together and plan our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Guten Morgen, my name is Wayne McDonald. I salute you. I am a currency trader. I'm a commodities trader. I'm a stock indices trader. I'm an investor. I manage endowments for nonprofit organizations. Wow, lots going on, which means I kind of need to look at the market in different ways. For example, what's happening today? How can we make some money? How do we do some scalps? How do we get in some day trades? But then I need to step back a little bit. Are there any swings? Are there any positions? And then from an institutional sort of investor point of view, how do I feel about the stock market coming down for the next 6 months? And what would I need to do to hedge that risk? So, there's a lot going on, and you got to come at it from different points of view. Hey, did you know there's an eclipse today? Yeah, there's a solar eclipse. You have to be up in Boston to see it. Everywhere else is going to be cloud cover. Sorry, Texas. All right, so anyways, look, lots of things going on. We'll have to go through the calendar. I'm going to use TRADARS calendar. And we can look through the week that way as well. Okay, And I'm showing both TRADARS here and Trader's Way. And the reason I bring this up is TRADARS has some pretty interesting features. Like a radar is a trade plan based on what might happen in the future. These are trade setups that are coming. Like a radar looks outward and says it sees things. Right? Think about what a radar is doing. Like classic military strategy, right? You set up a radar and it's looking out for things that are moving towards, right? And then we have sonars. What is a sonar? Think of a destroyer looking for a submarine. It looks down. In this case, what a sonar is doing at TRADARS is looking into the past, which is really cool. So like this is a radar and it spotted something less than an hour ago or about an hour ago. A USD Rand on a 30-minute chart, a breakdown occurred about an hour ago. Okay, cool. What I want to point out today is something even better because it's looking through years and years and years and years and years. And tens of thousands, hundreds of thousands of news events. Like, for example, let me just show you a calendar. Here's a calendar. You've seen a calendar. There are many like it, but this one is ours. And there's just loads and loads and loads and loads of data this week, right? Loads and loads and loads. This is all just this week, right? Loads and loads of data. Some of it's important, some of it's not. So you would say, well, the important stuff gets volatility, right? Yes. But you as a trader, maybe as an investor, you don't care. But as a trader, you want two things. You want the volatility, but you want a repeatable pattern. So here's one step further. You go to the sonars and you look at what's on that calendar. Does the thing on the calendar produce volatility? And of the things on the calendar that produce volatility, does the AI spot repeatable patterns that were actually produced in the past? And so like we go today at 8:30, there's some Aussie news and it breaks it down, dollar pairs, if the actual is less than consensus. Or if the actual, when the news comes out, is greater than consensus. It looks at these things and it says, well, okay, this is Aussie. So if it comes out if it comes out less than consensus, it spot a 75% chance in the past, right? In the past, 75% of the time. On the 2-hour chart, it went up 75% of the time in the past. On the 4-hour chart, it went up. And 12 hours, and 2 days. So you get a scalp, a spot, a swing, and a position trade out of Aussie dollar based on what happened in the past on Aussie dollar, on this NAB business confidence, in situations where the actual is less than expected. And look at this, and it's quite different. Okay? Now, notice it's less time frames. Why? Because the other time frames didn't have repeatable patterns when the results were greater than expected. And notice that there's a time difference. There's a day trade, right, or a scalp that breaks down. Well, that's interesting. And this is all dynamic, and when the news comes out today at 8:30, all of this changes dynamically and just gives you the information you need. But look at how it makes this decision. Okay, it's got to do some calculations. Okay, cool. And so you're like, hey, TRADARS, tell me, how do you get to this conclusion, right? We can draw the following conclusions about the expected movement of Aussie dollar based on the last 12 business confidence events in Australia. If the actual is less than consensus, 75% chance the 4-hour trend will be up. Well, how do you get to that conclusion? Why don't you prove it? Boom. Okay. Okay? Look, after the event, it went up. After the event, it went down for a little bit, then closed higher. The news came out, closed higher. Okay? In these other situations, it came out less than expected. You see? So it's just showing you when it came out greater than expected, this is what's happened in the past. Past performance does not predict future results, but you know what actually has happened. And think of how much data TRADARS has to produce 15-minute candles before and after every major news event in history. And then look for patterns and then calculate statistics for you and then give you, okay? Now, the reason I bring all this up is that is crazy levels of information. I don't know if it's going to make you a better trader. I hope so. But if you're booked by your broker, they're not going to love it if you suddenly become more successful. Now, I don't know your broker. I don't know their management. I don't know their business model. I don't know their ethics. But a typical Forex broker will book their clientele, meaning the vast majority of their clientele, they expect that trader to fail. And it's in their business model that if you fail, well, it benefits them. So I don't know if TRADARS will, I'm not promising you TRADARS will make you a better trader, but that's crazy levels of detail. And so if you happen to improve and you happen to have a broker that books you, they will not like the fact you're suddenly more successful. So I've been recommending Trader's Way for almost 10 years. It's an ECN. And that business model is symbiotic with their clients. So they'd be tickled pink if you were more successful, right? I showed them TRADARS, and their response was, cool. Some of this technology is not going to be welcomed by other types of brokers. So, anyways, if you like TRADARS, I highly suggest you look into an ECN, and the ECN I recommend is Trader's Way. It's just, that's how you thread those pearls. So anyways, going back to the sonars, it tells you what news events are going to produce repeatable patterns with volatility this week. And so you have today or tonight at 8:30 p.m. New York time, you have this Aussie news. Okay? At midnight, you're going to get Japanese consumer confidence. And that produces a repeatable pattern, but only on 3 symbols. Then we have inflation on Wednesday. Ooh, the clock is still off. The timing is still off because of the European server. I thought Europe changed their time, didn't they? I'll ask the developers about that. This is all off 1 hour. But anyways, United States inflation on Wednesday, 7 symbols affected. Bank of Canada interest rate decision a little bit later. Then US PPI on Thursday. UMich. Okay. Now, you're like, Wayne, there's a bunch of stuff that's not on here. There's the New Zealand interest rate decision. There's the ECB interest rate decision. That kind of stuff, right? That's what you're thinking. Why is it only Bank of Canada? Once again, the AI is looking at all the news events like ECB interest rate decisions, looked at all of them in the past, looked at whether it came out as expected or as not as expected, looked at what the price action actually produced before and after the news event, looked at them on all the USD major pairs on multiple time frames, and guess what they found? No repeatable pattern. Now, it might produce volatility. In fact, it's almost certain going to produce volatility. But volatility without a repeatable pattern is just risk. You know what I'm talking about? Yeah. So I have a little scalp going on here. What do you guys think? Any thoughts on this one? Now, my daily pivots are down. Cool, man. Yeah, yeah. Talk to me later about that. I'd like to figure out what it was. But yeah. Yeah, I'll see you later. We can talk about it. So anyways, bada bing, bada boom. What do you think? Could there be a little skippity scalp short-term trade here? What do you think? Cool glasses. Thank you. Yeah, the Tom Ford. I really like his stuff. So I have 3 pairs of Tom Ford sunglasses now. But they're good. But I like his style. And I love the fact, though, too, that he worked at Gucci. And he's like, man, all the stuff you're forcing me to design are for, like, old ladies. He's like, I want to design something better. And they're like, dude, you're a lead designer, but we're Gucci. We'll tell you what to design. So he quit. Dude, you're the lead designer at a major design house like Gucci. And they're like, and you quit. Most people work their whole life for that. And then he's like, well, look, I want to design stuff that's better. Better than Gucci? Well, Gucci doesn't understand that, right? So he leaves, goes on his own, and he starts designing stuff not just for women, but for men too. Right? So anyways, he does that. He's doing his own thing, and that's competitive. And he's successful. Well, I think about 2 years ago, he sold his brand for over $1 billion. Oh. So I love it when people exit, They get an exit and like he risked it all to go on his own, and there's a huge, massive payoff, and he did it. He did it. I love it. I love it when people are successful. So anyways. Anywho, I just like it. I like success. Even if it's not mine, if it's somebody else's, I love it. Okay, what about climbing back up here? Is this going to work? Is this suddenly game on? Are we risk on today? It's kind of interesting. Well, we've pulled back. We've hit the 2155. It acted as support. So what do you think the next 24 hours is going to look like? What do you think of something like this? May only be a day trade because, well, we got this up here. Okay. Remember how pivots work. They're not magic. It's math. And so what is this? This is the R1. And it does calculations, right? So what goes into that calculation? The simplest version is high plus low plus close, right? Divided by 3. Correct? For the basic calculations, and then from there, there's other calculations. But the point that I'm trying to make is it looks at tops and bottoms. It's a weighted average, so it also looks at the close for sentiment, market sentiment. But my point here is, based on the math, it sees the old high. That's why it's important. But you want to, if you're trending, the real information is knowing the importance of the close. The sentiment gives you possible direction. Okay? So, for example, you might be a bull, and if so, what does a bull assume? A bull assumes Aussie dollar is going to make a higher high. If you don't think it's going to make a higher high, you are not a bull. I kind of look like Max Hendricks, huh? Max Hendricks. So anyways, so the math sees the top. That's why I like pivot points. I think it's good math. Because it's looking at range and trend at the same time. Huh? At the same time. Cool. Are you going to follow the moving averages? Maybe. Huh? What about the April position pivots? This predicts we're going here. So, is that what you're doing? What are you doing? What are you doing? What are you doing? Are you doing it? What do you think? You think? What do you think? Ride the 2155 higher? We had it dropping, but then look, it double bottom, it breached, and then gave you the pullback. Now this is another pullback on a higher time frame. So one way to analyze this, if you're going to want to be a bull, okay, so it's done a 50. What does a 50 predict? Well, a 50 is a middle. So it predicts the middle target. Oh my God. 66.66. So nobody knows the future, but what are you going to do? What have you set up? What are your plans? Okay. Oh, speaking about plans, it keeps popping in my mind. If you're in my Council of Investment Advisors, we have a portfolio performance review today. Will be done in an hour. So again, if you're a member of my CIA, please swing on by, and I have sent an email reminder. And there's a request to discuss hedging strategies, how and when, in relevant conversation to portfolios. Sure. Let's do it. Richard wants to talk oil. We can do that. I spoke about it at the Quant Box video today. But, okay. So I've been bullish on oil for quite some time. Okay. And you can see back in February, I created well, actually, this is a TRADARS trade plan, but it was supposed to go up between 85 and 92. And we're right in the middle of that. Okay. With some seasonality, this has the potential to run higher, but does it have to run in a straight line is kind of the next question. Could it plausibly do one of these first? Yeah. It is inflationary. All right. So to me, this is a seasonal play. Every single person at QuantBox already knew this. Of course, I've discussed it 100 times. But if you're a subscriber to QuantBox, you knew this. It's seasonal. Yeah, of course. I think I even cover it at Investor Boot Camp in the oil trading course. Yeah. All right. So there are, so now the next is sort of the price action. What I point out now is a couple of things. One, on the short run, we've already hit the predicted high for April. Okay? April is already done. Do you understand that? You're like, but Wayne, it's like the 8th or something, isn't it? I'm like, yeah, okay, it's April 8th. It's done. But there's so many more days in the month of April. What does that have to do with anything? It's done. So it could go higher, but it also could come all the way back here. The next thing I want you to look at is what's called a term structure. So you have an April contract, a May contract, a June contract, okay, a July contract. Guess what's the next one? Okay. All right. Now, there's quite a few things coming that are kind of a part of this. One general idea is if you're going to buy oil as a consumer, so you're an airline, and instead of oil, you'd buy jet fuel. But let's say you have your own refinery. So the thing is, when do you actually want to take delivery of your oil or your jet fuel? Well, if there's lots of demand in now and you need it immediately, you're going to pay a higher price. Is one way to look at it. And whoever delivers to you says, well, look, hey, if you can wait a little bit, I'll give you a better price if you can wait till June. And you pay for it now, or you sign the contract now, and I'll give you a better price if you can wait till June. And if you can wait till September, I'll give you an amazing price. Now, if you do that, there's some extra little fees. They're called carrying costs because it has to sit in storage and you have to pay for the storage. But this could be a 10% better price. Like, this is dramatic, but I'm just trying to make a point here. And this might be 25% cheaper. Now, of course, it's not that dramatic, but okay. And that's normal. But sometimes what you find is the reverse, backwardation and stuff. But the point is, you can look at these prices, and it's called a term structure. Okay? And there's normal and there's abnormal. And if you do some research right now on the term structure, it's suggesting that all of this makes sense. And it has been and is still going up, but the term structure is breaking down for the bullishness. And it could just be short term and then we regroup. Well, it's just interesting that that is happening when we hit the April target. So you're like, Wayne, I don't know anything about term structure. Well, you know YouTube. Okay. And you can learn about term structure and learn about the spread between these months. Is it expanding? Is it contracting? Are they reverse? Is the September higher than April? Okay, what does that mean? Okay, is there a premium or a discount? So like, okay, you can get it right now, but because you need it now. Right, Richard's like backwardation and contango. If you need it right now, and lots of people need it right now, it makes sense that you're going to pay higher price. So you can just think of this maybe a premium because you're demanding it instantly. And you get a discount if you can wait. That's one way of looking at it. Okay, there's different, you can describe the same thing in different ways. But anyways, all I'm saying is this is up. It should be up. It's obviously up. It's normal that it would be up. It was expected to be up. It was designed to be up. Quant Box has it up. I teach it to be up. I knew 20 years ago that this is likely to be up. Now, great. I drew the plan. TRADARS thinks it's up. Quant Box thinks it's up. And it's up. But if you're only waking up now, okay, well, that might be a sign, right? Look, you didn't like it in December. You didn't like it in January. You didn't like it in February. You didn't like it in March. And now April, it had a huge move. Everyone on TV is talking about it. And it slammed into the target. And now you're interested. Really? I thought you were boss. I thought you were in control. I thought you did your research. I thought you planned things in advance. Now you want it up here at resistance. Okay, that's sort of a silly Sally went to town walking backwards upside down. You're not quite planning it properly. So now there's a high probability that maybe some of the smart money that bought down here, okay, and then bought again here, and then bought again here, and then bought again here, now they slam up here, and they're like, take profit. Is it possible? Yes. Is it possible? Yes. Is it going to happen? I don't know. But is it possible? Yes. What about term structure? Says that's also possible. Is it going to happen? We don't know. But I can tell you, because then you're going to say, someone snooty is going to say, well, now that it's happened, right? Well, look, I believe, based on my research shown by QuantBox, but even research done 15 years ago, that there's plenty of upside potential for WTI yet to go. Weeks of upside potential. But that doesn't mean we can't have a three-wave correction. And the difference here is if it did start a correction and it fell for 2 weeks, guess what? If you were late here, all of a sudden you're going to start selling here. And I already know, well, if it does come back down to 80, it's a buy because I have quantitative analysis of this asset class. I also read the government reports. And things like seasonality give me the strength to let my winners run. But technically, that is a profit-taking zone. Kind of like this was a profit-taking zone. Kind of like this was a profit-taking zone. So, should you let it fall and then sell? No. Should you let it fall and then sell? No. Should you let it fall and then sell? No. But there's a high probability that it'll fall for 1, 2, 3, 4, 5, 6 days in a row, no higher high. Look at this X, even drawn in advance. Okay, 1, 2, 3, 4 days. So they're not lasting very long. So could you have 1, 2, 3, 4, or 3? Could you just even have 3 days and kick it off the 21? Maybe. Okay, but notice also, to get above this zone is not easy. So think about it like there was a quick recovery because this hit the target late in the month. This had a slow, it took a long while to get up because they hit in the middle of the month. So notice that it came down and then climbed back up, and it was 2 weeks before we even retested the high and then made a higher high. Okay, so there's end of the month, middle of the month. So what happens if we hit the target early in the month? It might be a lot slower before we recover. That is a definite maybe. What do you think? Was that helpful? We can see what, if you only want to look at it technical and you're like, Wayne, I don't want to know anything about backwardation. I don't want to know anything about seasonality. Well, you can go to your active trades, okay? Or you could go to, go to the radars. Go to the radars, go to commodities. And these are trade plans that are forming. Now, actually, I made a little change, and maybe that's why it's not loading. I was playing around with this earlier today, and I said, only show me breakout patterns. So these are sort of like, they're almost active patterns. They almost go here. Not quite, pretty close. They're closer to that. So I said, only give me, patterns on commodities that are active. And what this is apparently telling us is there is none. All right, so let's look at, for commodities, patterns that are in the process of forming. These are trade plans that you should be planning and thinking about entering. And look at that, there's so many more. So TRADARS is looking at USD or at WTI. 43 minutes ago, it noticed at 86.56. Okay. an upward channel. Possible bullish price movement toward 89.94 within the next 3 days. Holy schnicker schnocker. On the hourly chart. Jim says all radars are emerging. That's not 100% true. Yeah. All these ones. So I think I can go back, but maybe I'm wrong. Let's explore that in a second. Here's a WTI on a 15-minute chart. So this day trade only gets us to 87. This is right? This swing trade gets us to 90. Okay? This came out 44 minutes ago, and so did this one. Okay? Different time frames. Okay? On a 4-hour chart, there's a hesitation, but then the up. Right? So you got to put things in context. You still have to think. I'm sorry to tell you. You're still going to have to think. So let me do it this way. I have to change my drawing tool a little bit. Okay. Okay. What do you think? That's your swing trade up to 90. So TRADARS just told you that just above us. Okay. That's what this is telling us. The down and then the up, but that's an hourly chart. The other one is a 4-hour chart. Okay. So you got to like down a little bit. And of course, what I'm doing here is, I'm just doing basic price action, right? Simple enough, isn't it? What would you do in a situation like that? Yeah? But at least it's doing the analysis, right? It's helping you form your technical strategy. It only does technical analysis. It's not thinking at all. It's not interested in contango, right? It's not interested in backwardation. It's not interested in supply. It's not interested in the tensions in the Middle East. All right, so here's all these patterns. Let's check this out. Maybe I'm wrong. So I'm going to turn off emerging patterns. Save. No, see JP? So notice what it's doing here, JP, is it's saying 2 hours ago, okay, there was a breakout of this level. So if you wanted to be a bear, your assumption could be like this. Okay? As you've been taught, if you're a bear and there's a lower low, you sell the lower high. And that's what it's assuming. And it's even showing you the new candles. It's showing the up, but up into the moving average. So there might be a trade like this coming. This is 2 hours old. It's a USD Rand 30-minute chart. Yeah, so you'd go into the 30-minute chart and you plan it out. Okay, maybe you prefer to use a little Fibonacci. So you go here, the lower low creates a lower high, right? You go to here, see again, it's not emerging, it broke out. Okay, you see? Okay. So it's like, dude, it made a higher high. Remember, it's not thinking. It just noticed the pattern of it made a higher high. When you get a higher high, you can consider buying a dip, probably kicking it off that moving average. And short term is 152.22. Longer term is 152.83. But I'm telling you, if that worked on this hourly chart, I wouldn't be shocked if this goes to 155. Now, why would I say that? Because I'm thinking beyond just technical analysis. So to me, that's a pissy little day trade. You could probably get a swinger position out of it. Okay? And so notice that they're not, I mean, they're kind of active, but they're not like, these are the actual breakouts. So this one has actually made a lower low. This one is actually made a lower low and setting up a lower high, right? Like they have actually already done it versus these other ones are like, they're showing you channels and all that kind of stuff. And they're like, well, you would sell there or it would come from the bottom of the channel to the up of the channel. Now, I don't like that type of trade. I'd rather be bearish and say, well, I'll sell at the top, but I don't want to buy at the bottom. Well, it's indifferent. It's not thinking, oh, well, what about the negative swap? Dude, it's technical analysis. Okay? So anyways, pretty neat how you can manipulate this stuff, right? And you're like, when I do crypto, I don't want to look at Litecoin. I only want to look at Bitcoin and Ethereum. Well, turn Litecoin off. Isn't that cool? I want to do Forex and the stock indices, but I don't want to do individual stocks. We'll turn them all off. It's gorgeous. Huh? Smoking hot like fire? When I turn, you desire. All right. So anyways, right? There you go. So there's a few commodities there. We can do a biddy. Where's my biddy? Biddy, biddy, biddy. Can't you see? Sometimes your trades just hypnotize me. I'm going to move my stop to break even because I can. Oh, I missed it. Sorry, I thought I got it. Well, I'll delete it. I'll come back to that later. I missed my Bitcoin. Boo! Gold, right? That gold. Look at the gold right on the take profit zone. Oh my God. But notice what we've had. Very simple. Now, combining TRADARS with QuantBox is just amazing. This is the day QuantBox went bullish. And then look at the basic plan here. Okay, and there's different variants of that, and then you could just, who knows? But what we do know, what do we know? This is the projected high for gold for the month. That's it. We know that. I talked a lot about gold this morning on the QuantBox video. I did not upload it to YouTube. I'll try to remember, but I have a busy morning. Again, I have to prepare for my CIA meeting. Okay. Really want to see this stay bullish. Ooh. What time is it? I'm running out of time. I would love... Okay, so one of the things I teach you inside of Investor Boot Camp, I think it's the day trading course. I teach you how to trade inside the wicks. And I look at that as very hopeful. Very, 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 very hopeful. And that will maybe get us up here. But we have a lot of central bank information this week. We have inflation on Wednesday. No, Tuesday. Tomorrow. Is it tomorrow? Maybe it's Wednesday. And then Wednesday as well as the FOMC meeting minutes. So there's a lot that can change this. But if you're going to trade technically, inside the wicks is the way to go. And so, that it's hopeful. Yeah, it's a good idea to watch these things on all the different time frames for sheer. Okay. Okay. Okay, you like that? Yeah. What else is going on? Here's the Kiwi trade, my little skippity scalp. Wait. Skippity scalp. It's a risk on skippity scalp, front running the market open. Trying to drink not more water. I'm trying to drink water. What do you guys think? Is it going to work? Is it not going to work? Any opinions? Jim says it'll work. Don't worry, you're not going to hurt my feelings if you disagree with me. Perfectly fine. Nobody knows? Nobody knows. Thank you, Mike. Frank says no. Yeah. What do you think it'll get hung up on what? M3? Weekly M3? Yeah. Well, at the time they were both similar, we'll say. Well, the only thing I want to mention about gold is the possibility of certain central banks buying. We don't see it on we don't see buying on retail except at Costco. But retail traders are not buying gold futures, for example. Institutional investors are buying gold futures. And then, so the only other buyers would be would be central banks. But for most central banks, it doesn't make any sense. So very often when you hear like people that are crazy gold bugs, they'll always say things like, "Oh, well, it's all central banks buying." I'm like, really? Why? Well, because fiat currencies are crap. Really sort of, we'll call them generic answers. When I say, well, why don't you explain the monetary policy of the central bank and their objectives for buying gold? You'll get sort of flat answers. If you think about what's actually happening, so gold has gone up, very little increase in retail future purchases, some increase in institutional purchases, but a dramatic move in gold since CPI went up a couple of months ago. Who's creating that dramatic move? Now, the logic of gold going up is perfectly sound, and like I said on my chart, I even have it labeled, and QuantBox has it labeled, and I've gone over it many times, so I don't need to do it again. But I'll just pop it up here that, it makes sense. Where's the gold? Okay. In general, it makes sense. Will it continue? Well, that's for you to decide. Okay. Monthly target, maybe an annual target. Yeah. Okay. Is it the end? Well, that's your job. That's your job. And if a central bank was buying gold, will they continue? Well, I doubt the central bank is using pivot points. They don't care. But if you used pivot points and you saw a change of trend in here, let's do it this way. You saw a down, a top, okay, down, top, top. At some point, you must recognize the potential of risk. No, I don't use quarterly. I suspect they might work in stocks, but anyways, I don't. I have nothing against that, of course. Yeah. So yes, should you be worried about a top? Well, let me make one more point, and then, I think I'm going to go. When you're at a worrisome price level like this, in particular, we put a lot of weight on this price, and we also know that that's a monthly target. So we have some serious concerns, right? Potential top. And the stock market is like that too. This is in particular when you look at the Commitment of Traders report. QuantBox does a beautiful job on COT. It's beautiful. And when you combine changes in institutional positioning on top of hardcore technicals, okay, it could be dramatic. To say it differently, Commitment of Traders report is most useful when the market is heavily long or heavily short. Think of it as a bubble indicator. And so if you have a bubble in an asset class where everybody's long or everybody's short, and then you run into a situation like this where it gives some rationale for taking profit, what happens is you create an avalanche. Some people take profit, and then that drops the market a little bit. Hits some stops by those who are concerned, which drops the market a little bit, which then brings in some bears, which drops the market a little bit, which hits some more stops, which then hits more, and then panic, and there's a snowball effect. It starts small and then becomes unstoppable as people, let's say only 30% of the market is selling, but as they sell, they're hitting all the bullish stop losses. And then the more it falls, the more people are jamming their stops higher. And so if I were me recommending something to you, wait, I am me and you are you. I would combine, the COT report at QuantBox, with technical analysis, maybe guided by TRADARS. And start looking for, is this showing up? And if the vast majority of the up that we had sort of in this area was the central bank buying, and the secondary buyers were hedge funds, well, if the buying stops, the demand goes away. But if they're hedge funds take profit. So you suddenly lose demand and then have selling. Meanwhile, you get your next door neighbors over at Costco buying bars of gold, little bullion or ingots of gold. Maybe that is the top. How will you know? Look at your COT, do your technical analysis, and make the tough decision. I'd also do research on well, first of all, think about it. Of all the central banks in the world, who would be buying gold? Well, to answer that question, you need to know the effect. And you need to know it's a policy. If a central bank decides to buy gold, it's not just so random like, hey, Bubba, what do you want to do today? I don't know, I'm bored. Let's buy some gold. Now, obviously, there's a strategy. So what is the effect of a central bank buying gold? And why would they do it? What market conditions or monetary conditions would that economy need to be in for them to employ that type of strategy? Then you can figure out who it might be. Then you do some research and whatever. Or you just do what you always do. And that's fine too. If you're happy, I'm happy. But you can put a lot of thought into what you do as an investor, as a trader, and maybe it brings you peace or even joy. And wealth and riches beyond your wildest dreams, if you're smart. Peace on earth, may the pips be with you, may your profits be above average. I will see you around. Cheers.